What's up, guys, and welcome to the McInnes Marketing Minute. As Jay is, are you good?
It's too short.
It's not the first time you've had that. Anyway,
Good morning, everyone. How are we?
If you are just joining us and just finding out what we're all about, this is where we give you a monthly update as to everything market orientated in Vancouver real estate. And in between that as well, we also fill you with nice tidbits on the market on how to succeed and what's going on. So
crazy.
that you know everything Vancouver real estate. And yeah,
That's crazy.
It is crazy. And we are on to the February 2020 market update. Get it?
Okay. Do you want to start or do you want me to start?
Yeah. So I mean, we'll probably just jump right into the straight fact. Everyone's always asking a question: are prices going up? Are prices going down? What's happening with the market? What you're actually looking at and what actually that's based upon is something called a sales to active listings ratio. So in a nutshell, when the ratios are below 12% for a sustained period of time, that is a key phrase, a sustained period of time. When it's below 12%, it puts pressure on prices moving down. When that
Calling it
a buyer's market.
Thank you.
When that figure is between 12 and 20%, it's typically a balanced market, and prices are going to somewhat maybe fluctuate slightly, but remain relatively consistent. And then above 20% is the seller's market, and then it puts pressure on prices upwards. So
all these guys need to know about is the numbers we're about to tell them, where they slot in.
Exactly.
And showing that trend line.
Exactly. So these next numbers that we're about to give you, you can actually make sense of what they mean. So
I feel these are more realtor numbers.
These are more realtor numbers, but everyone always wants to know, is the market going up or down? And then you guys can understand how
we look at it.
One of the main ways in which we look at it. So for February, the detached housing market was 17.3% sales to active listings ratio. So that's kind of in the balanced mark. I mean, in January, that was 11.6%. So again, it didn't drop below 12% for the sustained period of time. This is just the first month in the balanced market. So not really much price change expected to happen there. For the attached market, it's just been going up and up for a while now. It's sitting at 28.4% for February. January, that was 22.6%.
Of course, the majority of that, I just want to go back, detached market, we're seeing that consistency. The high end is still very stagnant, but the entry level is extremely busy. So that has kind of skewed up to that middle range of a balanced market. Sorry.
That's it. And then for townhouses, we're at a 26.9% ratio, and that was 23.9% in January. So really you're looking for the 3 to 6 months sustained period of time in those ranges. Condos have been consistently in that kind of range, so that's why you're seeing a lot more activity on them, a lot multiple offers going above asking, much more traffic through open houses and whatnot as well. So those figures are one of the main ways in which we look at what's essentially going to happen with the market.
Yeah, so using those numbers to derive, okay, are the stats showing us that, yes, it's this type of market? For example, the detached market is showing as balanced. What does that exactly mean? Does that mean everything is leaving the shelf at the same pace? Definitely not.
Yeah.
So from the foundation of these numbers, we're then looking at the market trends in addition to basically build a picture of what it actually looks like.
Yeah, so to Jay's point, it's not the be all and end all. So for example, the detached market, like he was saying, is that luxury market is still detached, but the prices are obviously much more higher. There's still pressure on them to come down a little bit, but yet the kind of 1 million to 1.5 million land sales, entry into first detached homes are going extremely fast and in multiple offers in a number of days on the market. So it's a rule of thumb that we look at, and it's an overall look. But taking a look at some figures in Vancouver, if you watched our January update, we made a point on saying that inventory is having a direct effect on the market right now, and that's still remaining true going into February. So, I mean, Jay, you want to give the east side and west side
details? Yes, but my eyes are
more fit. more range, fully challenged.
They're almost 40 now, you know. Okay. East Side condos. Listings and sales 2019, 230 sold to
So 230
listed to 112 sold. So East Side condos 2020, this is February, 280 listings to 156 sold. So listings a little bit higher and sales quite a bit higher. East Side carrying on houses, 153 listings February 2019 to 54 sold, 157 listings February 2020 to 86 sold. So inventory level has been pretty consistent there, but up another 25%.
And these are new listings to market as well. This is not every listing on the market.
West Side condos, 694 a year ago listed to 210 sales, and 578 listed February 2020 to 304 sales. So sales have jumped up and the listing number has jumped down there. I think a lot of that West Side condos speed, listings leaving the market so quickly, is the environment around what we're seeing in that today. And then West Side houses, 188 on market last February, and 43 sold, 131 on market this February, and 62 sold. So again, less inventory and more sales, showing again from another avenue that the market is climbing, which is going to inevitably result in higher pricing.
That's it. So, and that's why you're seeing the prices slightly move upwards. I mean, from January to February, we went up 0.8%.
It's been pretty consistent, 0.7, 0.8.
Yeah, I think the average has been 0.7, so it's remaining pretty consistent, increasing. I mean,
and that's month over month.
Month over month. I mean, those figures don't look like too much, but then when you start looking at like 2 to 3%, possibly over the past kind of 6 months, those figures start adding up, and that's 100% of the reason why. It's when you actually look on February 2019 versus February 2020. The amount of sales activity is actually increased by 44.9%. So it's a huge jump in itself, and that's why we're seeing the prices slowly kind of come up here, and that's why there are more buyers out as well, because a lot of buyers are recognizing that and wanting to take advantage of that. There is one statistic that I want to bring to the forefront. If you've watched us, you know that we're not really fans on the 10-year average, as it doesn't paint an accurate picture in the way that we would like in today's market, which is of course always what we're looking at. But we are still, I think it's 15.6% below the February 10-year average for sales, which if you're in the market now buying, you will have seen how busy the market is and how quickly and just crazy it can be. So although we're 10 years below, it's very easy to look at that and think that, oh, I've got time.
Below.
Where no, it's more, it's like 15%. So it's like, it's very easy to think, I've got time, we're still below the average. Well, as you've seen, the market is increasing in terms of pricing. So time's not really on your side. And if you're out there buying right now and you're experiencing the market, can you imagine a 15% increase on sales activity? How much more crazy that would be?
I think the biggest point about that and the 10-year average is we find a lot of people in the comments comment based on 10-year average, 10-year average, 10-year average, where we are. And I feel that that's a very big benchmark for some people to look at that number, it sounds like only, and then judge the market that they may or may not be wanting to get in or out of. But that is the worst number to pick because it shows nothing of the velocity of the market if you're trying to get in or out. There's no reflection on what you're going to deal with in the market today.
That's it.
So you can watch it from afar if you're just, that's your benchmark and you want to watch and you're not buying or selling and you're just playing the game on the sidelines, then great, it's a benchmark. But if you're anywhere near buying or selling, I just think it's completely irrelevant because it shows no measure of what you're actually about to get into.
Absolutely. So in short, summarizing, sellers' inventory levels are low. So when you're putting your property on the market, you're competing with much less property out there and buyers are ready to buy. So if you're selling, as soon as possible is going to be better, because the more you move into the spring, the more inventory you see come to market, the more you're going to be competing with, which is just
the double-edged sword.
Which is the double-edged sword here. Now, buyers, now is a good time to get out there because prices are steadily increasing. And if you look at it, if you bought 6 months ago, you would have saved 2 to 3%. If you're going to hold on another 3 to 6 months, you would have essentially missed out on anywhere from like 3 to 5%.
Feel free to hold on for inventory purposes because what you want to buy isn't there. Do not feel free to hold on based on prices.